Hello everyone, welcome to the Ichimoku daily analysis for gold for Tuesday, February the 16th, 2010. Well, a very solid bullish candle today, a candle with a higher high and a higher low, and the market continues to appreciate in terms of the first time frame trend to the upside with a series of higher highs and higher lows. We had a few significant inside days, but the market wasn't able to change the trend to the downside, and a very large green-bodied candle today with a very large range as well. So the market is chugging along quite nicely as it appreciates in that first time frame, with the bulls showing that they're very strongly committed to taking this market higher, and they're taking control of this market on 3 of the past 6 trading sessions. Having said that, though, every time that we get an extremely bullish candle here, we tend to get an indecisive type candle with a very small body, so we need to be aware that that could happen. Especially considering that market is trading up towards an area of resistance, and that area is the cloud here, or the Kumo, and we know that that acts as a potential area of support or resistance, but also that area coincides with the swing high here around the 1125 region, so that could be significant for this market. There's a strong chance of the market penetrating this resistance, though, because the resistance offered by the cloud is only very thin, and the amount of resistance is determined by the thickness of this cloud, the width between the 2 indicators that make up the cloud. So very little weak resistance offered by the cloud here. So there's potential for this market to become quite bullish quite rapidly if we do trade up above this region with a very solid bullish close over the next few days. The market is trading down below the cloud at the moment, although it's very close to the cloud, so we could say that the market is almost neutral, although technically the market is has a negative bias because we're trading down below the cloud. And the market has now closed up above the Tenkan-sen and Kijun-sen, which is giving the market a bullish bias in the fast time frame and medium term time frame. So that's looking good for a penetration of the cloud here to the upside. The Tenkan-sen and Kijun-sen are both pointing sideways, so they're reflecting that the market is trying to find some equilibrium, and if we look in terms of big picture here, the market is in some sort of fairly large congestion area. Significantly, though, the market did close up above the Kijun-sen with a very solid bullish close, and that may be significant for this trend in the first time frame to continue to the upside. If the market does come off, then there is potential support offered down between the 1080 and 1066 region, and certainly down to around the 1040 region. We've seen the buyers come into this market quite solidly. This was a previous area of resistance, and it has held as a zone of support, quite a large zone, but we do need to be aware of that area. Over the next few days, the high of the current candle, and certainly this area around 1130, becomes important for the market, for the potential for the market to trade significantly up above this region and turn bullish. But also we should be watching the low of the current candle for a potential retracement back down towards this zone of support. Although I'd say that this market is probably more favoured, the probabilities favour this market to trade to the upside and potentially break the cloud and trade potentially up to around the 1160 region.